Hey guys, there's a weekly forecast for January 23rd through the 27th of 2023. Okay, so this week we're going to review the Nzdusd USD's weekly bias and cover a new daily bias on the dollar-yen pair. And moreover, be sure to check out the section where I explain what's been happening on the dollar-yen from a price action standpoint for the last year or so. Okay, so let's start off with the Nzdusd USD pair. Okay, this is a weekly chart. Let me run you by the current setup I was looking at. So the last weekly long trade, that form was right here. And the last weekly short trade, that form was right here, about a month ago. And so this weekly bias's risk parameters was between this pivot high and this pivot low right here. And then as you guys know, for the last couple of weeks, I was waiting for lower time frame confirmation to confirm whether this weekly bias is long or short. However, lower time frame confirmation never formed, and this week, price came up to its risk parameter level right at this pivot high right here. And so at this point, the weekly bias is reset. Okay, but for educational purposes, let's go ahead and review this setup on the lower time frames. Let's go over to the 4-hour chart. Okay, so on this 4-hour chart, that weekly long trade I just showed you formed in this area right here. And that weekly short trade formed in this area. And so the risk parameters was between this pivot low and this pivot high. Now, after the risk parameters were set, I was waiting for lower time frame confirmation to confirm whether this weekly bias is long or short. Or in other words, I was waiting for the lower time frame confirmation to tell me whether this risk parameter level right here will be hit before this risk parameter or the other way around. Okay, and as the weeks went by, if you guys recall, right on these trend lines right here, price was about to make some lower time frame confirmation. However, price ignored these trend lines used for lower confirmation and continued to range and then came up to these levels. Or last week, I was mentioning this trend line from this pivot to this pivot right here, which is another possible trend line that can be used for lower confirmation. And so if price came down to this level, broke it out, and immediately broke back in. However, price comes right back down to that pivot low. That will create strong short strength and confirm that weekly bias to be short. Okay, however, this week, price did not pull down to that level and went straight up to that risk parameter level right at this level right here. And so at this point, that weekly bias is reset, and I'll be waiting for a new weekly or daily bias to form. Okay, and that said, with this setup, the only option for me to take a trade was actually if the weekly bias was confirmed to be short. Now the reason is because if that weekly bias was confirmed to be short, that means the stop loss level for a short entry will be placed right at this level, while the main target will be at this level right here at the opposing risk parameter, which will allow me to take a short entry with a risk of roughly this area right here, while the reward possibility would have been about 6 times that amount. Okay, so just remember, just because you know the future direction of price through a bias, it doesn't necessarily give you a good trade opportunity, because we always want to keep in mind the risk and reward ratio when it comes to trades we want to enter. Okay, so when there's a new weekly or daily bias that forms on this pair, I'll keep you guys updated. All right, let's go on to the dollar yen. Okay, and if you're having trouble understanding what I'm talking about in terms of biases and lower confirmations, please check out my forecast manual, which is an instruction book that helps you better understand these forecasts. So if there's a term or a concept you don't understand, you could look it up in the manual. Okay, and the link for that is in the details section of this video. All right, this is the monthly chart. We'll start off with an overview. So since this move up all the way up to these levels right here was solely based on momentum, in the long term, I'm short biased. Right back down to this pivot right here. And moreover, on the daily chart, since there was a short trade that formed right here and a long trade that formed right here this week, and I'm waiting for the lower time frame confirmations to confirm this bias, in the short term, I'm neutral biased. Okay, let's talk entries. Okay, this is a weekly chart. Let me run you by what's been happening on this pair for the last year or so. So back in June of 2021, right at this level right here, there was this weekly short trade that formed. And then in August of the same year, there was a long trade that formed right here. Now this short trade was stronger than this long trade. And so the weekly bias was short, or in other words, price is likely to reach this pivot low before reaching this pivot high. However, as price ranged about all in these areas right here, there was a new monthly trend line that ran right through these levels, which became a target for this weekly bias. And so at this point, this weekly bias was reversed into long. Or in other words, price was likely to reach this pivot high before reaching this pivot low. Now recall on the pound dollar, I was explaining that when a new monthly trend line becomes a target for a bias, that creates a tremendous amount of opposing strength, which will be long in this case. Okay, so just keep that in mind. And then as price came all the way up to these levels right here, there was again a new weekly short trade that formed. And then 2 weeks later, there was a long trade that formed. And again, this weekly bias was short. However, this time, there was a monthly strong gap level that runs right through these levels, which again became a target for this short bias, and thus reversing this bias into long. Or in other words, price was likely to reach this pivot high before reaching this pivot low. Okay, and after that main target was hit, price just ranged about for about 2 months. And then from this pivot right here, price made this extreme move all the way up to these levels with absolutely no biases that formed throughout this entire duration. Okay, and as price peaked out at about 151 and price fell all the way down to these levels, there was still no new biases that formed. And finally, in the last couple of weeks, there was a new daily bias that formed in these levels right here. Okay, so like I mentioned in the overview, I said I was short bias in the long term right back down to this pivot low right here. Now that's because, in my opinion, this entire move, starting from this pivot right here, was solely based on momentum. Now the reason is twofold. Now, number one, when there's absolutely no biases that formed in the run this large, there's no substance behind that move. And thus it's just momentum that's pushing it up there. And so the basic idea is that what goes up must come down, right? Okay, and the second reason is, like I mentioned earlier, on this initial bias setup that formed right here, where a new monthly trend line became a target, that produced a lot of long strength. Just like how on the pound dollar, it produced a lot of short strength. However, the difference between this move up right here and the pound dollar's extreme fall is that during this move up, on each one of these weekly and daily candles, there were no signs of extreme long strength on it through current price. Okay, and opposed to the pound dollar, that extreme fall throughout the last year showed a lot of current short strength in it. Okay, and you know when current price has extreme short strength on it because there's consecutively many rejection candles on it. Okay, like this. Now, a rejection candle to the downside is basically a hammer, or in other words, a candle with a very high wick with a small body to the downside. Okay, and as you can see on this dollar yen, there are no signs of that strong current long strength throughout this entire move. Okay, so those are the reasons why that in the long term, I'm short bias right back down to this pivot right here, where this momentum started. Okay, but now let's go ahead and look at that new daily bias that formed in this area. Let's go over to the daily chart. All right, so on this daily chart, the last short trade that formed was right here. And the last long trade that formed was right here, about 5 days ago. Now, the first thing we want to do after we find a long and short trade is to measure the strength between this short trade against this long trade. So let's go ahead and do that. We'll go over to the monthly chart. Okay, so on this monthly chart, that daily short trade formed in this area right here, and that daily long trade formed in this area. Now, in terms of what's providing short strength for this short trade, is first of all, we have this monthly gap level. It runs right through here. Let me go ahead and show you the levels for that gap. Okay, so the top level is at 132.83, and the lower level is at 132.57. Okay, so this monthly gap is providing short strength for that daily short trade. Now, in terms of the long trade right here, there are no monthly or weekly elements providing long strength. Okay, so at this point, that daily short trade seems to be stronger than this daily long trade. And so the bias for the time being seems to be short. Okay, so let's look at this a little bit more in detail. Let's go over to the daily chart. All right, so again, on this daily chart, that daily short trade formed right here, and that daily long trade formed right here. Now, for the time being, the bias seems to be short, or in other words, price is likely to reach this pivot low before reaching this pivot high. But like always, the lower time frame confirmations have the ultimate say in terms of these biases. So let me show you what I'm looking at in terms of lower confirmations. Let's go over to the 1 hour chart. Okay, so on this 1 hour chart, that daily short trade formed right here and that daily long trade formed right here. And so the risk parameters is between this pivot high and this pivot low. Now, first of all, I'll try drawing this trend line from this pivot to this pivot right here. Now, if price could range around a bit and then come up to this trend line, break it out, and immediately break back in, that will confirm normal short strength. However, price comes right back up to this pivot high, confirming strong long strength. That will confirm that daily bias to be long, or in other words, the main target will be at this pivot high, while the main stop loss level will be at this pivot low. Okay, remember, in terms of lower time frame confirmations, the reason why I want price to range about a little bit is like how I explained in my courses, that lower time frame confirmations trend lines must have even pivots. Okay, so the touches must be equal in distance. Okay, so that's why I want price to range about a little bit and then come to that trend line. Okay, moreover, even if I do get this confirmation of this daily bias to be long, I'm going to need to pull back close to that main stop loss level at about 128 for a stop loss of about 100 pips. So that's at this level right here. Okay, on the other hand, in terms of lower confirmations confirming a daily short bias, try drawing this trend line from this pivot to this pivot right here. Now again, if price could range about a little bit, making these pivots even and then coming down to that trend line, break it out, and immediately break back in. That will confirm normal long strength. However, price could come right back down to that pivot low. That will create strong short strength and confirm that daily bias to be short. Or in other words, the main target would be at this pivot low, while the main stop loss is at this pivot high. Okay, and so if that daily bias is confirmed to be short, I'm going to need a really big pullback for me to take a short entry. Again, because the stop loss, it will be at this pivot high. Okay, but as long as that lower confirmation sets up, I will be willing to take a long or short trade. Even if the long-term outlook is short because of that momentum play I was referring to earlier, these biases have the ultimate say in terms of future price direction. Okay, so we'll just see what happens with this one, and I'll keep you guys updated. Okay, so like I explained briefly on the Nzdusd USD's bias, in order to be a trader, it's not enough just to know the future direction of price. Every trade you take must have a clear-cut stop loss and target parameter. Or in other words, you must know before entry at what price level you will exit a trade when price goes in the predicted direction. And just as importantly, at what price level you will exit a trade when price doesn't go in the predicted direction. Now, the reason why we need a stop loss and target for each trade is one, for the obvious reason to protect your account. But what lies under that obvious benefit is that protecting your account buys you the time to become a better trader. Now, don't let people fool you. Trading is not a money game. It's a skill and technique game, where the honing of your trading technique is the ultimate goal. Now, if you could shift your focus away from monetary gain and onto enhancing your technique as a trader, I believe that you just took your first step in becoming a real trader. Okay, so don't forget those stop loss and targets, guys. And I hope you guys have a great week. Thanks for watching, guys. Goodbye.